Hey guys. Okay, quickly, tell me. So, what does it mean when a market says yes is 65 cents? Or does it mean like it's too late or the perfect time to buy? Um, if you don't know, don't worry. This video is going to answer that and hopefully change the way you think about probabilities. Welcome to episode 3 of Prediction Market Series. I'm Surbhi, and today we are breaking down how to actually trade yes or no markets. How to trade yes and no markets. This is the simplest and most powerful way to turn insight into profit, especially if you understand how the prices work, right? And just a small deviation from yes and no market, but kind of like important. The reason I'm talking about prediction markets is because yes and no markets make it so easy for us to make trading accessible, as well as, make it something which allows people or us to trade things on things we know already, right? And not spend more time in terms of like learning how to trade per se. Hopefully, let's see. So, how does a yes and no market really work? There can be only two possibilities, right? Either it's a yes and no. Is England going to win the match? Apparently, 60% probability over here, right? Or let's say, what else can we see here? Okay, will Ravindra Jadeja take more than 5 wickets in the 4th Test series? It seems like 83% chances, right? So what does it mean? So you're trading, when you see a simple yes or no markets, it basically means you're trading binary options. Prices go from anywhere between 1 cent to $1, right? So it has to fluctuate between the two. When you buy yes at, let's say, 0.83 or 83%, if it resolves to yes, you basically earn 1 minus 0.83, right? Or in other terms, 17 cents. If you buy no at, let's say, 35 cents, and if it resolves to no, then you earn, again, 1 minus 35 cents. So what does this price really mean? A 65 cent yes means the market thinks there's 65% chance the event happens. It's not arbitrary. It's real-time probability set by traders. So what that means is that every time, let's say, let's take some market. Fine. Will India ultimately win the test series against England? It says 55%. So here 55% means that right now you can buy the yes share at 55 cents. And people have continuously bought either yes or no shares and finalizing the probability of the market, right? More people buy, let's say if more people start buying yes, it will go up from 55 cents, maybe 56, 57, 58. So more demand means the price goes higher. And that is what we call in prediction markets the collective wisdom of the crowd. It's because people understand and people believe that this is what will be the truth based on their skill set and knowledge that they already have. So it's not arbitrary. It's rather, a sum of masses and what they think. That's what describes it. So we've already kind of touched upon like how the profit really works, or the profit math. If you talk about it again, if you buy yes at, let's say, 55 cents, and that means you will be earning 45 cents if you're right. If you buy no at 45 cents, you earn 55 cents if you're right. So basically, you're not just guessing, you're assessing mispricing, if that makes sense to you. So that means the natural question would be when to trade. I would say when your belief is not equal to market belief, right? You can trade when your belief is also equal to market belief, but if you think about it. How can you take the most advantage? Of course, it's not financial advice. Then I would say that if you think the real odds are like 80% and yes is at 65 cents, that's the edge. So for example, if you take the real case example, will Bitcoin hit, let's say 150,000 by December? And yes is trading at 40 cents. And after ETF approval, it jumps to like 70 cents. Traders who bought early cashed out in without waiting for the final resolution, correct? So in short, that's how you trade yes and no markets. Simple to enter and deep once you start trading seriously. In the next video, I'll show you how to time your entry and exit and why you don't always need to wait for final results to win. All right.